Welcome to today's stock market news update. Let's start with developments in agriculture and trade. A Yahoo Finance article reports that in the United States, farm bankruptcies are increasing quickly because of low crop prices, and President Trump is thinking about a bailout package that could reach up to $14 billion. The number of farm operations filing for bankruptcy is still at low levels from history, but has gone up a lot this year as problems in the farm economy continue. In the second quarter, there were 93 filings, up from 88 in the first quarter and almost double the 47 at the end of 2024. This is far below the high of 169 in early 2020, but filings have been going up since 2022. This matches with higher costs to produce and big drops in crop prices, like corn down about 50% since 2022 and soybeans down about 40%. Also, President Trump's trade war this year has stopped China, a big buyer of US soybeans, from ordering from American farmers who face a tough harvest season. This situation in US farming could affect how markets view trade risks and economic health. Shifting to related trade flows, a Reuters article notes that Brazil's beef exports to China increased by 38.3% in September compared to last year, reaching 187,340 tons, which helped make total monthly exports a new record. China has bought more as part of its plan to stay away from farm goods from the United States during the current trade war. Strong world demand for beef has let Brazil make up for the effects of US tariffs on its exports. In August, the United States added a 50% tariff on shipments of several Brazilian goods, including beef, which already had a 26.4% tax. This shift in global beef trade could influence market views on how trade disputes redirect supply chains. Now let's look at China's moves in key resources. A Reuters article says China made its rules on exporting rare earths stricter on Thursday, adding limits on processing technology, working with others overseas without approval, and making clear it plans to restrict exports to defense and semiconductor users outside the country. The Ministry of Commerce put out a statement that exports of technology for mining and processing rare earths or making related magnets need permission. Many of these technologies were already limited, and it's not clear right away what the new rules add. These changes in China's export policies could impact how markets see supply for tech and defense industries. Moving over to Europe, where economic data and policy changes are in focus. Trading Economics reports Germany's industrial production dropped by 4.3% from July to August 2025, after a 1.3% rise in July, and this was much worse than what markets expected, which was a 1% fall. This was the biggest monthly decrease in industrial output since March 2022. This weak performance in Germany's factories could signal broader challenges for Europe's manufacturing, potentially affecting investor confidence in the region. On a similar note in Europe, a CNBC article explains shares of the continent's largest car companies went down on Wednesday because of worries that the European Union's recent steps to protect its local steel market might hurt the auto industry. The European Commission announced on Tuesday plans to raise steel tariffs and cut import limits a lot, to give strong and lasting protection to the region's steel industry. The plan includes setting tariff-free import amounts to 18.3 million tons a year, which is a 47% cut from 2024 steel limits, and doubling tariffs to 50% on any extra imports. These trade protections in Europe could create ripple effects for related sectors like autos, which might influence market reactions. Finally, turning to technology and artificial intelligence, the CNBC article reports NVIDIA's CEO Jensen Huang said on Wednesday that demand has gone up a lot this year as AI models get better, moving from simple answers to complex thinking. Huang said that in the last 6 months especially, the need for computing has increased a great deal. The United States needs to build more power generation quickly to meet the demand, or it risks falling behind China in the AI race, he said. This surge in AI demand could drive shifts in tech investments and energy needs, possibly moving markets in new ways. That's all for today's video. Stay tuned for more updates and don't forget to subscribe.